Okay, folks, welcome to the Contrarian Trader. We're going to touch upon the overall condition of the stock market this evening, and I'm going to go over a list of stocks. Let's just run through them really quick. First one's going to be Bank of America. Second one is going to be PFSW, PF Swede. I touched upon this one last week. Next one is ABAT, Advanced Battery. Next one is Sequence Communications. Again, another one I touched upon last week. ASTI, this is a new one. ADY, Hoku, HOKU. Away, another one I touched upon last week. And the last one is SCHS, School Specialty Inc. Now let's begin with the chart of the S&P 500, SPX, or you could use the SPY, same thing. People ask me, how do you know when to get short of the market? Well, the market sends you signals. It doesn't need to decline to send you signals. As a contrarian, I am always looking for divergences. I'm always looking for signals telling me that a rally is weakening. Now, take a look back here in early December. We're up against the upper band of the pennant formation, and what did everybody on CNBC tell you to do? Buy into the year-end rally. We're going to rally, Santa Claus rally. See, they're going to throw out words like seasonality. For the past 40 years, this is what the market has done. Well, if you would have listened to them, you would be sitting with a net loss right now. What I was telling members is, look out, we are at the top of a pennant formation. That means there are sellers here. Also, take a look at the topping tails, meaning as the market rally, you have sellers come in to dump their shares. Now, fast forward to the 16th and 15th of December. Now we're midway through the month. So the forecast from CNBC and all their talking heads, and as well educated and as well dressed as they are, and the money that they make, you would think that they would get it right. But they didn't. You'd be sitting with a huge loss. Take a look at the topping tails that are forming on the SPX. The market is sending you signals. It's weak. It's tired. It wants to go lower. Even with positive economic data coming out on the economy, it still can't hold a rally. Why? Well, let's face it here. Look, IBD, today's IBD, Investors Business Daily, my Bible, besides Reminiscence of a Stock Operator. Fitch, rating agency, Euro fixed beyond reach. That's their quote. Moody's downgraded Belgium by 2 notches to AA3, citing, quote, sustained deterioration, unquote. How can anybody have confidence in this market to stay net long, buy and hold, which is dead for now? It'll come back. But when you're in a secular bear market, which is what we are in right now, you will see counter-trend rallies or cyclical bull rallies, but you are still in a secular bear market. You need to keep that macro view of the overall stock market in mind when you're trading. So when we're in a secular bear market, I am always looking to get short. Does that mean I don't trade to the long side? No, it doesn't. Every single stock that you're going to see me profile today is a long. But the reason why I am profiling these stocks is due to the fact that they are at extreme or nearing extreme oversold levels. That means that my risk to reward it's on my side. I'm calling the shots, not some suspenders wearing guy on CNBC. Me and my charts. That's who's dictating what I'm going to trade in the coming week. Let's begin. All right, so we went over the S&P 500. Look at this. Topping tails, look at the massive volume. That's not good. That is not good. Add to that Next chart, Bank of America. Bank of America has remained in a primary downtrend for quite some time now. Now it's into a secondary downtrend. I could see Bank of America breaking down a lot further. Take a look at the candlestick action on Friday. You have this key reversal. It traded higher than the previous day. As a matter of fact, this is a bearish engulfing. It engulfed the entire previous day's trade to close lower on the day. That's not good. This is the same pattern, the candlestick pattern, that you'll see on the XLF, which is the ETF on the banking sector. Early December, Bank of America came 2 cents away from breaking below $5 per share, which is huge for a bank to trade below $5 per share. If we fail to hold $5 per share on Bank of America, look out below on this market due to the fact that the banks make up 20% of the S&P 500's earnings. And what the market is telling you, not just on Bank of America, but on the entire financial sector, is that it's weak, it's getting weaker. The problems in Europe are undefined right now. We don't know what impact a deteriorating Europe is going to have on the American banks. What's their exposure? Nobody knows. It's a crisis of confidence. So we can get all the great economic data we want in the United States. However, if you have a run on a bank and you have a bank go down in Europe, the concern is going to be who is holding their debt. Who is a counterparty to their trades? And traders are not going to wait for due diligence to get done. They're going to sell and ask questions later. So please, be careful. Let's move on. PFSW, PFSW. I profiled this last week. We executed a trade, and we got in. This is a really quick trade. We got in on Thursday. I sent out an alert on, this is a 15-minute chart on PFSW, PFSW. I sent out an alert on Friday, seeing that the market was deteriorating, that we ought to be selling our position. We had more than 14% profit in 24 hours. I mean, how can you beat that? And PFSW is a weak stock, and weak stocks tend to get weaker. When you see the market in deterioration, what you need to do is you need to take profits where you can. This is a low volume stock. It traded a total of 140,000 shares, just over, on Friday alone. So if you have a big chunk of shares to unload, the last thing you want to do is wait for the inevitable, the sell-off. When I sent out the alert, this was the candlestick. It was about 1 o'clock, a little after 1. From that point on, the market just sold off into the close, as did PFSW. And we would have lost a large amount of our profits. So we're out of PFSW. As of right now, I don't anticipate getting back into it, but you never know. If it gets into, again, an extreme oversold condition, then great. I'll trade it again. And take note of the topping tail here. And it closed just slightly above the parabolic downtrend line. That's key. It's a critical downtrend line. It closed above it, but I wouldn't be a bit surprised to see it trade lower on Monday. And take a look at the volume. You had a big move on Friday. However, the up volume rolled in lower on Friday. Not good. Let's move on. ABAT. I profiled this one last week on the Contrarian Report, and a number of my members told me they were interested in it. Although I didn't trade it, I kept an eye on it for them, and I sent out an alert on Friday afternoon that it was at its 50-day moving average. It looked like you had sellers coming in, so you might want to consider taking profits. Sure enough, later on in the afternoon, they just sold this sucker off. A huge sell-off. I didn't see this until just a few minutes ago. But again, this was It was trading at, when we profiled it last, at about 28 cents per share. It traded as high as about 90 cents. It's a huge gain. So congrats to my members who joined in on that trade. However, this is probably going to go back down again, and we might jump on it the next time. Sequence, SQNS, Sequence Communications. This one here, we did not trade yet. We are keeping an eye on it. It's still on our watch list. Volume remains high. If I had to hazard a guess, it's probably going to break below the 231 level, going a bit lower. RSI is at 15. I like it. However, you can't just use an RSI or any one indicator. You need to look at the candlesticks. What are the candlesticks telling you? The candlesticks telling you that, you know what, this thing probably wants to take out 231. The volume, still relatively high. Stokes, this is, although they're below 20, this is such a bad, these technical books that are out there, I always say, technical analysis for dummies, if there really is a book out there that says that, they say to buy stocks, like a blanket statement. Stocks are oversold once the stochastics goes below 30. Well, let's take a look at what we would have done when the stock went below 30. We're going to move the stochastics higher so you can see. Here you have it. The Stokes went below 30 back here. That was at $5 per share. Take a look now. They're below 20, and the stock is below $3 per share. It's at 231. I mean, really, what value does that book provide you? You can't just use any one indicator. And I reference the RSI a lot. I reference the Stokes a lot. I use so many different variables to come to a conclusion as to whether or not to buy a stock or short a stock. I can't put it into words. But right now, SQNS is not telling me it's a buy. It's saying we want to go lower. The Stokes, although below 20, they're probably going to go a little bit further down. There's going to probably come a time this coming week that we're going to want to get long of SQNS. So, if you want to get alerted to when we decide to buy SQNS, sign up for the 14-day free trial offer. Let's go on. ASTI, Ascent Solar Technologies. Listen, the solar stocks are going through a very, very bad time right now. A number of them are going bankrupt. So you need to use only money that you can afford to lose with stocks like these. This is a stock that's trading at 51 cents per share. That's not good. If it were above $5 per share, well then okay, I can rationalize this having a bad quarter. This is a stock it's not a cyclical. You know, cyclicals go down to penny stocks and they go up into the teens at the height of the bull market for their sector. This is not a cyclical stock. This is when it's trading below $5 per share. The market's telling you there's problems here. There's problems that can't be ignored. However, what we want to do is we want to take advantage of the extreme oversold nature of the stock. You know what keeps coming up on my screen? MF Global. Is ASTI any more speculative than MF Global was before the announcement that they're bankrupt and they can't find $1.2 billion? MF Global was a blue chip, but now it's a penny stock bankrupt. So you can't believe anything that these companies are telling you because they lie. Here's a senator, a former governor, John Corzine, who apparently, he hasn't been tried yet, but apparently lied through his teeth. And now a major company is out of business. So is ASTI any more speculative than MF Global? I think not. Now, if your intent is to trade it for a short covering rally and then get out. If you think that you're going to buy ASTI at a deal here because the daily charts are telling you that the stock is at extreme oversold levels, it can't go any lower, folks, please, this is not an investment. You need to trade this stock, get your profits, and then move to the sidelines. Take your wife out to dinner. Have a good time. I mean, this is not an investment by any stretch of the imagination. All we want to do is take advantage of shorts covering their positions. That's it. Let's move on. Oh, ASTI, RSI 1579. Interesting. Candlesticks are telling me it's probably going to go lower. Volume too high on the downside. Choppy action on the ultimate oscillator. I'm going to go into this further with members with the other stocks as well. This is not for me on Monday. Maybe Tuesday. We'll see. Hoku, H-O-K-U. This is an interesting stock to me. It was on our extreme oversold list a few weeks ago. The stock rallied. Beautiful, beautiful bottoming tails here. Rallied up to 80 cents per share. Great return if you got out at the top. Nice pullback here. W formation. I'm going to go into this with members on the Contrarian Trade of the Week Ahead commentary. That goes out to members only. Won't be posted here on Sunday as to why I believe that Hoku is a buy right now with a risk to reward that's safe. So if we decide to pull the trigger on this stock, I'll be sending out an alert to members. So stay tuned, members. Away. Home Away Inc. Away is the symbol AWAY. I profiled the stock last week. It's not doing good. This is not a beautiful chart to me. I think that the stock is going to probably head lower. It's going to get interesting later on in the week. The RSI, see, stocks could trade sideways with not that much of a return and alleviate this oversold condition that you saw here. And although, according to the books that are out there on technical analysis, the stock is at oversold levels, it can go lower, folks. So please don't get excited about this stock and jump into it on Monday. I think there's a potential here. I would like to see it a bit lower, and I would like the market to tell us that it is a buy. And it's not telling us that right now. It's telling us that, honestly, 24 is resistance. So we're going to want to wait for a pullback. Last one for the evening is SCHS, School Specialty Inc. This is interesting. I like this one. Big volume here. Volume has got to drop off. Way too high right now. You can see that it's entering this parabolic phase, downtrend. It's like again, the tertiary, that third downtrend, that blow-off bottom. You always hear about blow-off tops. You never hear about these blow-off bottoms, or is it called capitulation selling? And that's what you're seeing here right now, which makes this stock interesting to me as a contrarian. However, not yet. I'm seeing reasons here on most of these indicators of as to why it's not for me yet. It's not for my members yet. So I will be sending out an alert. Huge drop. Look at this, 23% in one day. That's scary stuff. However, it's still interesting to me. I can't help it. You see Kramer on TV dropping a Bowie knife. Don't drop this. No, I mean, don't buy this stock. You know what? It's on my radar screen. I'm watching for the Bowie knife stocks. I like that stuff. That's how I make my bread and butter. There comes a time when those Bowie knife stocks, it's time to buy them. So he's right to a certain extent, but there comes a point where the bottom's in and the market tells you when it's time to begin accumulating those shares. This is one of those stocks. So you have resistance at 436. So we want to get this at a better bargain because the probability of that being a spot where you're going to need to sell and take profits is very, very likely. So I'm going to want to see this stock with probably a little bit further to get that risk to reward even more on my side. RSI is still only at 23. Gag me. It's not cheap enough yet on the RSI anyway. So we're going to see the stock go a bit further lower, and we're going to look to get into it. And that's it, folks. If you have any questions, please shoot me an email, and I'll answer your questions. Sign up for the Contrarian Report. Please, you'll get notified as to when I send out these blogs. And if you're interested in any of these stocks or our portfolio, remember, we're net short. And I'm talking about stocks right now that we're looking to long. That's only as a hedge against our short position. So we had a relatively good week last week, and the stock market didn't do much. So if you want to join up for the 14-day free trial offer, see how we trade, give it a try. If you don't like it, you cancel. Have a great trading week, folks. Take care. Bye-bye.